Hi everyone, I'm Devin Coombs, and today I'm going to go over the accounting principles for our Accounting 101 Quick and Easy course. So this is going to be really key to understanding the theoretical concepts behind accounting, and I'm going to give you a practice problem at the end of this to really reinforce it. And that practice problem would be similar to what you'd get on a CPA exam or on your Accounting 101 course. So let's dive straight into it. So there's four accounting principles. We have the measurement principle, the revenue recognition principle, the expense recognition principle, also known as the matching principle, and the full disclosure principle. Just a quick background on each and the overall concept. So the concept here is all of these rules will govern accounting and all of the transactions that you will see in your accounting course. So if you understand these principles, you'll really understand why we're making certain journal entries, how we're accounting for certain transactions, and why we have financial statements. And so the overall theory of accounting really ties into these, and I believe it's extremely useful to understand. These aren't just memorization questions, but understanding this will help you with your accounting and finance and business knowledge. So the first being the measurement principle, that's that accounting information is based on actual cost. So I know of this as the historical cost principle as well, which means that if we purchase an asset, we aren't going to assume its fair value right at the purchase. We're always going to assume what we paid for that asset is its cost, and we're going to record it at cost. And this, if you think about it, allows for less manipulation of financial statements. A fair value of an object or an asset or a liability or anything is really difficult to determine, and it's really subjective. But what we pay for an asset is objective, and that's what accounting is getting at, is what is the objective value that you paid for an asset. And so that's where the historical cost measurement principle or cost principle comes into term. They're all known. Those are all terms that are synonymous. The next key one is the revenue recognition principle. This is a little more complex with ASC 606, the new revenue recognition guidance, which talks more about performance obligations, but the theory is generally the same, that revenue should be recognized when it is earned or when a performance obligation is satisfied. And so that's when goods or services are provided. So performance obligations are that thought is if we're providing a good or a service, if it's been provided and if we satisfy that obligation to our customers. We don't need to exchange cash in order to recognize revenue. We can recognize revenue before we receive cash or even before we bill. And so I have other videos on that in the journal entries series, but that's key, right? We don't need to receive cash right away in order to recognize revenue, and sometimes it can be non-monetary. We can recognize revenue in exchange for other goods. And so we'll be measuring the revenue by cash received plus value of other items received as well in some circumstances. The next key one is the matching principle. You're going to hear this a lot because it's where accrual accounting really comes from, is from this revenue recognition principle and the expense recognition principles, or the matching principle. And that is a company must record its expense in the period that it generated its revenue. So if I purchase a building, I'm going to need to recognize that expense of the building over the life of the building where I expect it to generate revenues. And that's where we get issues like capitalized costs, where we have deferred assets, and where we have deferred liabilities. And we really get our GAAP-based accounting from the revenue recognition principle and the expense recognition principle, or the matching principle. So just know, even if we pay cash in advance for rent, for buildings, for salaries, it doesn't mean that we will recognize an expense because we need to match those costs, right? Costs are different than expenses. We need to match those cash costs to the revenue that they recognize. And so this leads to a lot of the complexities of accounting. And so just know that these two pieces really tie into GAAP accounting and what makes it different from cash basis. And finally, we have the full disclosure principle, where that a company is required to report the details behind financial statements and financial users' decisions. And so we might think of this as if a company had a lawsuit and they haven't incurred a cash liability yet, or they haven't paid any liability related to that lawsuit, investors still would want to know about that lawsuit, or creditors would still want to know about that lawsuit, and the company would have to disclose that information. Same if the company was in process of buying a very large company and had a future commitment, or had large amounts of commitments that they weren't reporting on their financial statements. Any of that information that's useful to investors or creditors needs to be disclosed. And so these four principles are really going to guide most of our accounting knowledge. And so interesting to think that these 4 principles really build out to thousands and thousands of pages of accounting literature and accounting decisions. But if you understand these principles, you'll really understand the background to a lot of these questions that you're going to be asked, and really the theory of accounting. So let's dive straight into how would you see this on an exam, either the CPA exam or just a regular accounting exam. And so you might get in a practice problem like this. So which of the following statements is false with regards to GAAP? And so the key question here is false. So we're looking for which statement is not true. So we'll pass on the true statements. I'm going to walk through each one of these and why the answer is correct or not correct. And so a company must recognize expenses in the periods where those expenses generated revenues. So we know that's the matching principle. We talked about that. So that's a true statement, so that's not the answer. B, if a company purchases equipment for $10,000 that has a fair value of $15,000, it will record the equipment at $10,000. This is true as well. This is the historical cost principle, right? And that's why I added this problem, is to illustrate that even if we purchased equipment at a good deal, we would still record the equipment at the cost, the $10,000. So that's true. That's the historical cost principle. So that's not our answer. C, if a company has significant pending lawsuits that would impact financial users' decisions, it should disclose the lawsuits on its financial statements. We talked about that last. That's the full disclosure principle. And that's true. Yes, if it's going to impact financial users' decisions, then we should disclose it. And there's a matrix for that, which we'll go over in future videos. And then D, revenue cannot be recognized before the company bills its customers or receives cash. So this is not true, so D is going to be our answer. Remember, we talked about the revenue recognition principle, is we'll recognize revenue when a performance obligation is satisfied. So in this case, or when it's earned, in other words. So in this case, sometimes we earn our revenue before we bill our customers or receive cash. So D would be the false statement. And here's a summary here, just for your reference, right? So A relates to the matching principle. This is how you'd see a question for the matching principle. B is how you'd see a question for the historical cost principle. C is for the disclosure principle. And D is a revenue recognition principle. And so this is very similar to what you would get on an exam. I think if you practice and understand this question, you would be fine. And then going forward for your accounting knowledge, you should have this as a fundamental understanding for your future lessons. So thank you very much for watching. Please subscribe and have a great day. If you have any questions, just feel free to add comments below. And thank you for your time. Bye-bye.